But I would love to know, what is your sense? Dr. Yardeni, can I start with you? What do you think is the key reason why we've had such a stellar rally in the yellow metal?
Well, when we saw it break out above 2000 last year, we concluded that there was something going on here that was likely to continue to drive gold prices higher. And you didn't really need to have a PhD in economics or more than a high school degree, because the news was that central banks were buying gold. And the reason for that was when Russia invaded Ukraine, the United States froze the reserve assets of Russia. And so a lot of central banks that in countries that don't have share the interests of the United States government concluded that maybe they should have more gold and a lot fewer dollars. And so I think the steady ascent in gold is that simple. I think it's really mostly related to the ongoing purchase of gold by major central banks. And if you just take a very simple trend extrapolation, I think it could get to 4,000 by the end of this year, and 5,000 by the end of next year, and maybe 6,000 before the end of the decade.
Wow. Well, Dr. Yardeni, I must tell you, I can end the show right now, because all people who are watching this, especially people in India, will be very happy listening to this forecast. But Naresh, can I get you in on this conversation as well? Because a lot of people would say this, right? That history may not repeat, but it definitely rhymes. Is there something to... You look at that very, very closely, and the predictions notwithstanding. Is there something that we can learn from history which could tell us something about the current price movement of gold and what could happen possibly in the future?
So I think it's event similar to what happened in 1970s, Neeraj, where US closed the Bretton Woods window and went back on the promise to convert dollars to gold. And as Dr. Yardeni suggested, alluded to, the freezing of Russian foreign exchange reserves, I think, was a similar event. Countries are trying to de-risk the geopolitical angle to the foreign exchange assets, and they are buying a lot of gold. And very interestingly, retail is just warming up. That's very different. So it is a little different. ETFs have been popular for about 25 years in gold, and gold tonnage and gold price usually move in tandem, because investors are performance driven. But this time, the gold ETF tonnage cumulatively across all ETFs worldwide is below the 2020 peak, while gold is up 50% from the 2000 peak of 2020. So it's something really different moving, and I believe it is central banks, and not
as Dr. Yardeni
said. I'll just extend it further. Probably central banks are buying more than what they're disclosing. That's the current account data of import-export, which is suggesting. So yeah, I think it's a very interesting setup in terms of how retail is just warming up.
Could you elaborate on that? And I mean, is there hidden buying happening in gold? And Naresh, a follow-up to that, if your hypothesis is that retail starts buying now, following the performance, if you will, watching this show, if you will, does that lay the foundation for the price targets that Dr. Yardeni spoke about? I mean, it may not necessarily hit in the timelines and the same targets. I'm sure Dr. Yardeni is probably saying that, knowing that too, but just trying to understand if you believe that could be the backstop.
So if I step back, gold moves in very long cycles. So there was a bull market in 70s, 71 to 1980, gold was up 18x. In that period, $44, $45 to $800. Then there was one more cycle, 2000 to 2012. I think gold was up from $250 to $1,800. So gold moves in very long bull and bear cycles, and the tailwinds and the triggers are there. I don't want to place a target, but I think if the cycle plays out, it would surprise the most bullish optimists.